Hey everyone, it's Nagpal from Remax Hallmark, just reaching out today to give you a quick update on the real estate market in the Greater Toronto area. I'm sitting here in my car, just figured I'm going to get this quick message out to you because I haven't been able to get you a quick, full market update for the month of July. So I have my notes here that I'm going to read off quickly, and I'm not going to try to keep this video too long, just keep it casual and quick. I'm going to try to highlight the trends that I'm seeing in the market instead of kind of going over all the stats. I'm going to post separate slides for that, but for now, for this video, I'm just going to try to stick to the trends that I'm watching and the things to watch out for over the next 6 to 8 weeks. So first off, downtown rentals. I mean, that's the story that I've been talking about for the last about 3 or 4 months. And downtown rentals, we have a glut of inventory right now. There's a lot of condos on the market for rent. The rents have fallen approximately about 15 to 20%. And, there's a lot of supply, but there's not enough demand. And the demand was really being driven by the immigration and the international students, as well as the local students as well. So in the absence of these universities holding classes in class and no immigration happening for the time being, the demand side has stopped and there's a lot of supply on the market. So that's driving the prices down for the rentals significantly. So if you're looking to rent, this is an ideal time. The rents have fallen 20%, and it's you won't find a time better than this to rent downtown Toronto or in the 416 in general. What that's going to lead into is the suburban market. So a part of the reason for the supply in the 416 of the rental condos is a lot of the tenants are choosing to move out of the city. Now that they have the option to work from home, they are choosing to move out of the city and rent in the suburbs, especially if they're planning to have a family or if they need more space, especially if both the people are going to be working from home. So they are moving out and trying to find bigger spaces. So as a result, the suburban rental market is quite hot. So if you look at, rental market, let's say, north of the city, west of the city, or east, the rental market there is quite active. Things are moving very, very rapidly. So there you see a big contrast between the downtown or the 416 market condos versus houses in the suburbs. I have my notes here. So condo sales are going to get impacted, and they're beginning to get impacted already because of the high rental supply on the market. Imagine if there's an investor and they have 2 or 3 or 4 units and 2 or 3 of them are sitting vacant. Some of these units are going to begin to hit the sale market now, the resale market now, and that's beginning to happen now, and I think it's going to continue to happen. So in the short term, I foresee that there's going to be some softening of the prices. I don't think there's going to be a massive crash in the condo prices, but definitely prices are going to reduce and soften a little bit, in my opinion, given the levels of inventory that are already on the market for rents. Some of them will become available for sale. Also, a lot of the units that are coming online this year, occupancy has been given for pre-construction condos downtown and the 416. The 450 to 700 price point is still moving very, very quickly. So $450,000 to $700,000, any condos listed in that price point, they are still moving fairly rapidly, but anything above that is taking a little bit of time. The months of inventory have been going up for the condos, despite the fact that the sales have been going up. So that kind of leads me to believe that there should be some level of softening in the prices. Freehold sales. I mean, this is the big story everyone talks about. Freehold sales across the board, 416, 905, they are up. There was a lot of pent-up demand. The consumer confidence is high, and that again goes to show the grit and the resiliency of the GTA market. People still have the confidence in long-term economic outlook for the Greater Toronto area, for Ontario, and for Canada in general. I mean, Canada remains a very desirable place in the world to be, especially given how we've handled the COVID situation. And more importantly, the interest rates are very low and the banks are still lending. I mean, that's huge. The ability of the banks to be able to still extend mortgages, to defer mortgages, to have the liquidity to be able to do so, that's huge. And that's also a driver in the fact that the freehold market is doing very, very well, and I think will continue to do well for the foreseeable future. I also want to share my top 3 areas of growth. This is what I've seen happen over the last about 6 months, and this is what I foresee is going to happen over the next, next little while. So first, the Durham region, so which is basically Ajax, Pickering, Whitby, Oshawa, and Bowmanville. I mean, that's really where you have the affordability. You could still find an amazing, detached home in the $700,000 price point. The next is Peel region, and which is again Brampton, Caledon, Bolton. Again on the outside, on the outliers, but again that's where the affordability is. If you're a first-time buyer, these are the areas you should be looking at. So again Durham and Peel, and again Halton. You've got the Hamilton, Burlington area. That's also something that's done very well over the last about 5 years or so, and I think will continue to do well in the future. And lastly, these are the things that I encourage everyone to watch out for. These are the things that I'm watching very carefully, and they will have an impact on where the market goes over the next 6 to 8 weeks or 6 to 12 weeks. Number 1, wave 2. Are we going to have a wave 2 or not? I mean, that really depends on all of us, how diligent we are. Do we wear masks? And, obviously to a certain extent on the public policy, especially with the schools reopening, we'll have to wait and see. Any signs of a big wave 2, it's going to dampen the market for sure. Immigration opening. When does the immigration really open? I mean, that's a big debate. I don't see that happening anytime to the levels that we had anytime soon. I mean, so maybe in 2021, but as the immigration begins to open up, I think that's going to have a very positive impact on the market. Just in terms of confidence, and also, of course, in terms of the literal number of people coming to the country. Universities opening. I personally feel that there's only a certain number of months that the universities can stay shut down. Post-secondary education, I think, will open for the January semester. And once they open, the international students are going to come back. The local national students are going to come back. And that's going to have a positive impact on the rental supply that's building downtown. And that should alleviate that problem. And the government stimulus, CERB has been amazing. So many people have been positively impacted, and they've been able to sort of get over this hump. But again, how long will the CERB continue? How long will the government stimulus continue? That's going to have a massive impact on where the market sits right now anyway. So I just want to kind of get my thoughts out to you. I hope you found this video useful. If you did, please do share it with someone that you care about, someone that you feel who might benefit from this. And if you have any questions, and real estate is always local, if you have any questions about your home or your community or your neighborhood, don't hesitate to reach out to any one of us. Thanks for watching and have a great day.